Hello, my name is Wrighton, Head of International Equities and Portfolio Manager for the Barrow Hanley Emerging Markets Strategy. I'd like to spend a few minutes today reviewing the first quarter of 2022 for both emerging markets as a whole, as well as specifically for the Barrow Hanley portfolio. The first quarter was a historically turbulent time for the emerging markets. The Russian invasion of Ukraine pressured all markets substantially. China's renewed lockdown around its zero-tolerance COVID policy also created some very large headwinds. Historically high inflation and rising interest rates accompanied by a strengthening dollar also contributed to the headwinds for the quarter. Value continued to outperform growth in the emerging markets, which has been the case for the last year and a half. And going forward, we think that will continue to be the case. But we think more broadly for the EM asset class, we think the second half of the year should be meaningfully better for both value and growth and in general the EM asset class. When you look at the second half of the year, we think that the top line growth rates are set to improve sequentially. We also think the political calendar, particularly in Asia, lines up in favor of a recovery. We think that in China, as they approach the back half of the year at the 20th Party Congress, there will be internal pressure to accelerate growth and likely loosen the zero tolerance COVID lockdowns. Of course, no one can tell that for sure, but that's our judgment at this point in time. A couple of the drivers of that performance were overweight to Latin America, as well as a modest overweight to EMEA, but an underweight to Russia, as well as an accompaniment by a significant underweight to Asia. In terms of sectors, we remain overweight in energy, utilities, financials, as well as consumer staples. We think going forward, we see more opportunities in these sectors. These overweights have been funded by notable underweights in information technology and materials. We do think that the broader information technology space in the emerging markets remains fairly expensive. There's obviously been a lot of pressure, both from a policy and a shareholder selling standpoint, which has lowered valuation premiums, but we still think it's a little early to wade in there. But certainly we're doing a lot of work on both information technology and more broadly in Asia. We do see some opportunities specifically in China and Korea as we approach the middle part of the year, and we'll look to take some profits on some of the winners that we have in Latin America and in the fund. So overall, we think it's an exciting time to be looking at new allocations to the EM asset class. Clearly, it's been a period of underperformance versus developed markets, and specifically the US. But the valuations are at compelling levels. There are very nice dividend yields at very cheap PE and price to book ratios to be had, with strong runway both in terms of post-pandemic normalization in front of the emerging markets, as well as some tailwinds created by strengthening commodity prices. That's all for today. Thank you very much for your time and for listening, and look forward to being in touch in the future.